channel. Hope you're having a good day. Today is Thursday, January 22nd. It's 1:33. I'm a little sunburnt because I went surfing. But let's get right into it. So, to start off the morning coming into market open, we have yesterday we tapped in and filled the new week opening gap right here. Then we had overnight consolidation into this morning. So what we were looking at this morning was for price to either continue going higher into these draws or a short into these draws lower. And so what we ended up taking was a short right here. Ignore these for one quick second. We ended up taking the short from here to here. That was 27 points. Why did we do that? Well, market open, we can see right here at 6:30, we started dumping and dumping and dumping. So even over here, let me just remove all of this real quick. We'd see that we swept out London high at 8:45 and coming into the 9:30 open. We already swept it pre-market, so we were coming down to take out London low and Asia. So what happened was we had a couple 15-minute caps, 15, 15, and a 15. So we broke the 15, continuation downward with bearish momentum, broke this 15, and so we were thinking, all right, if we're going to continue to go lower to sweep out some of these draws down here, we'll just take the break of this 15-minute gap to target this gap right here. So we took it for 27 to 30 points. It was a quick little short right here. Boom, boom. Right there. Some people got it for 30 points or 27. Stops were, I think, like at the high or a little bit higher. So it was a quick little trade. I did not take it because I didn't like how short of a trade it was and what price was doing. I was personally waiting for price to break below this gap right here to seek lower, like right here, and so forth. So I didn't take the short. I was waiting for price to come back up, break above this 15-minute gap to target higher. So this trade right here was a stupid little trade on the evals. So I took that on, I think it was the 15-second, just because I was looking at smaller time frame reactions on the 15-minute. So what I saw was price was coming up and trying to break above the 15-minute gap to target higher. It was a poor entry. Yes, we did break above this 15-minute gap on the way back up, but we reacted again off of this one, and that was also a rejection off of this internal gap right here. So I went long, and basically I got filled at 20, so that's right here. And this bearish candle came in and stopped me out right at 87, so that's, yeah, like right down here. So this candle just came in and just took me out. That was that trade. I don't regret it. I learned from it, and we move on. The trade I took on my PA was over here. So what I saw was, again on the 15-second, because we were still bouncing off of this 15-minute gap right here. On the 5-minute, we were holding it up pretty good. We bounced off it once, 2, 3, 4, 5. It's like 6 times already. On the 1-minute, same sort of deal. We could not break below it. So I was like, all right, let me look at the smaller time frame and see what the heck is going on in here. So smaller time frame, I saw, again, we were holding the lows and pretty much the equilibrium of the gap. And so what I saw here is market came up, tapped into this gap right here, and we came down. We were bouncing off of this gap right here, and we broke above this internal gap right here with strong buy momentum. So we had good reaction with draw sweeps with an SMT right there. Internal SMT right here. And so I got filled at 25568, I think is what it says. So 568, 678 right here. And so that was on this bullish push out of this gap and above this bearish candle. So what I was doing is I was looking to target the highs again as we were rejecting off of this gap. So I was looking for the same thing. Boom, come down, bounce back up. Come down, bounce back up. And so I got at 93. So basically at this sort of fair value gap area again. 3 contracts. That is right here at $149 on the day. So realistically, my account's only up $18, which is totally fine. So 1 win on the PA, 1 loss on the 3 evals. 3 evals are still up 776, and overall 3 winning days with 2 losing days. That's fine. But enough jibber jabber on the trade executions on the day. The whole purpose of this video is to kind of explain what I've been sort of thinking lately on my trading. So yeah, just sort of recognize simple base hits. They add up over time, and take it day by day by day. You don't need to force anything. Trade your one strategy, your one session. You don't need to overdo it in the PM session trying to trade gold or ES or silver or all that stuff. Just take your win for the day or your loss for the day, come back tomorrow. Like even right here, sure, I have my 1 trade loss for 186. It's fine. Boom, right here, made it back. And some more right here. Boom, another green trade. I lost a little right here. Boom, whatever, we're still up on the whole accounts. It's about accepting the trades you took, recognizing, was that a smart trade? Was that a good trade? And coming back tomorrow. It's just like, almost like robotic repetition every day, following the same thing. And even though I did take these trades today on my PA account that were on the 15-second right here, that's not even like a good trade in my opinion. The good trade was over here on the 15-minute right here. This was the good trade. Short, down here, boom, done. And so I guess my key takeaway here is like, in order to become the best is to just like small base hits every day. And I see people on here making like 50K a month, and they have like 10, 20, mostly like 20 accounts. Typically with like, we could say it's like 5 top step or 15 apex or 20 apex and like a couple top step or whatever it may be. They're just going for like for instance, I use three micros over here, and I got $150. And so for simple math, we'll just say $200 times 20. So 20 times 2, I think it's like $2,000. Or no, let me just, 20 times 20, oops, That would be better. $200 times 20 accounts, $4,000 day, just for going for $200. Well, so, and you times that by, I don't know, 5 days a week, times 5 days a week, 20. And then you can work this out in half, which is 10. Some days you win, some days you lose. And then, bro, it's just basics. $100, $200. Some days you get $500. It's just when you have these smaller accounts, at least for me, I have one PA and a couple evals. I feel like I'm forcing myself to like pass it quicker, or like I need the money now. But like when you have, it's weird when you have like more accounts, like 10 or 15 or 20 accounts, and you're like, I don't know. Utilizing TradeSyncer, it'll tell you how much money you're actually making. So it's like, I don't know. Just quick thought on the day. So that's the ultimate goal. Once I have these as 4 PAs, I mean, that's like the goal, is to keep trading this PA as my normal account, not risking crazy, just repetition every day. Hopefully I'll get these to four PAs, copy trade these, and then if I get any profits out of these, cool. I'll probably cycle that in over to Apex, start off with 5 or 10, and then I'll have 14 right there, and then again, just base hits every day. Probably only risking 2 micros, going for 1 to 1, going for $100 just to slowly build the accounts, because I don't need to full port these. I don't need to full port the Apex because I'll have these, and so yeah, enough rambling here. But that being said, hope you enjoyed the trade recaps on these 2 accounts. There's a winner and a loser. It's all about steady learning every day, and yeah. All right, I'm gonna end it there, and I'll catch you guys in the next one. Deuces.